Another company that did earnings while we were gone at Mobile World, God, it's like, couldn't they plan it differently? I mean, couldn't they be like, don't they know that
they plan around our schedules?
Don't they know that the commentators that could do the best commenting on earnings are going to be at MWC and are not going to be available to comment immediately on all those earnings? Plus those 11 p.m. CEO calls, it's really nice and all, but
yeah,
we're at 11 p.m. We're just heading to dinner at that time when you're in Spain. But anyway, so let's talk a little bit about the quarter and the full year. I mean, Marvell's story was up and to the right. It was up and to the right, up and to the right, up and to the right. And like all semiconductor companies, or nearly all semiconductor companies, there has been an inflection where at some point, the slowing of the economy, the increased supply, was going to start to create a little bit of turbulence in terms of growth. So Q4 was kind of the first for Marvell where the slowdown became really evident. But still, the company grew on a 6% year over year and saw a slight decline on a quarter over quarter basis. Slight decline on income. The data infrastructure business for the company grew 7%, and that's been the key. I've said quarter after quarter after quarter, Pat. I mean, the fact is this company's diversity of its revenue has been key. The company was able to actually say this year, it declared in its earnings, Pat, 88% of its revenue now is data infrastructure. The business on a year-over-year basis performed incredibly well. So while the quarter was a little bit soft, data center revenue 35% up year over year. Cloud led the way. Enterprise networking up 51%. Carrier infrastructure up 32% on the 5G ramp. And then, of course, automotive grew 43% with automotive Ethernet networking being leading the way. So 33% on the year, 35% non-GAAP growth of earnings. What's the point of kind of reading all these numbers? Because we do analysis, not news, Pat. The analysis is really good year. Now, the question mark for Marvell is now it's finished the year. The quarter sort of dragged it a little bit. When does it come back? And here's my take on it, Pat. The company's well diversified. We're seeing strength from infrastructure companies like Cisco. These are the kinds of companies that Marvell is supplying. You're seeing partnerships with infrastructure providers like Nokia that are going to be providing and helping generate the demand and growth for 5G at the telco and carrier level. The company's partnered closely with cloud providers like AWS to build, cloud scale silicon. So I tend to believe that being in the right markets, enterprise, cloud, 5G, and automotive, having 88% of your revenue sitting in that space, and knowing that digital transformation, buzzword aside, is going to continue to be the deflationary capability that's going to offset cost containment that's going to be done in other parts of the enterprise, that Marvell will be robust. Will growth slow versus a year ago? Yes, we are in a semiconductor gully right now across the board. The well-run companies that are in the right spaces, that have the right partnerships, are going to persevere, especially those that have very low exposure to this kind of consumer glut that we're in. And Marvell's in that space. So is it a perfect situation? No. Was it a great year for Marvell? I would say yes. Are we heading into maybe a 2 or 3 quarter period of tougher results for the company? I would believe that to be the case, but I think you're going to see a nice turn because of the way the company's positioned.
So this is one of the results that it's important to split the businesses up, and they have 4 main businesses. They have data center, which is actually cloud, enterprise, which is the enterprise data center, and edge, carrier, and automotive industrial. Enterprise was up 39%, carrier was up 14%, and auto and industrial is up 25%. And that leaves data center. So I drilled in, I listened to the call, and this 13% decline in data center was all about the storage business in the cloud folks, and it was an inventory challenge. They had more inventory, so there had to be some write-downs, and obviously sales were reduced, as well as all storage, right, inside of that data center. The company did project that data center storage was going to decline again across hard drives, SSD, fiber channels, and all this makes sense. Now, what I'm trying to peel together is which one of the cloud folks is actually pulling back. My guess is it's likely AWS, just because I believe that Marvell is a huge supplier on Nitro SSDs That's the only thing I can come up with right now. But again, as industry analysts, I mean, I like to look. I really don't care about the stock price and the value. I think the way that I am looking at it is, was this a self-inflicted wound? Are they losing market share? And the answer, I believe, is no. This is an absolute market. It's kind of like the discussion we're having around the PC folks, which is, was this bad management or a crummy market? It's a crummy market. And for the data center market with Marvell, they got hit, and we'll have to see how many quarters. Typically, these inventory balances or pauses out there in the cloud market take 2, maybe 3 quarters. But we'll have to see. And I did want to get a shout out. They did do the entire year recording, which 33% year over year increase in revenue. Non-GAAP EPS of 35%, data center infrastructure increase of 39%. And, you talked about the rebalancing that the company has done over the last 5 or 6 years. Data infrastructure revenue is 88% of total revenue. So that leaves 12%, I guess, for the other maybe consumery stuff that's out there. So, tough quarter. Be interesting to look in the future. The great thing is it's a diversified company, and when it comes to the optical, the copper to optical transition, it's hard for me not to look at them and say they're the leader, a leader, if not the leader.
I think our sentiment is similar, Pat, and I think the macro zoom out is that Marvell's prospects are good, well-positioned company.